Cool, guys, this is part two of the risk management section. This is very important. Now we're going to get deep dive into exactly how to calculate your lot size. How do you need to prepare for a trade? Because our strategy, usually you do have some time to prepare. Very, very important. Hope you guys understood a little what I was talking about in the previous part. Now we're going to get into some examples and just how to calculate it, how to position yourself so that you are utilizing your risk management properly, right? Um, so there's a couple of things you're going to need, and hopefully you already got it. It is TradingView. Obviously, we've got the TradingView chart over here. And then the next thing you're going to want to do is you're literally just going to search myfxbook.com Forex calculates position size. Okay, it's a free site that you can use. You can see I'm not even signed in. And this is super, super important to utilize. Otherwise, your risk to reward is not going to be right and your risk percentage is not going to be right. So, okay, two tools you're going to need to utilize on the TradingView platform to identify exactly what inputs I must have to get the correct risk, right? So here's just an example with Euro USD, right? And as you guys will get into the strategy, I'm looking for buys because previous day flows were bullish, waiting for the break above overnight high, which we can clearly see here. I am on the 15-minute chart. So we get a little bit of break above overnight high. I'm going to draw out my little supply and demand area. Okay, we can see draw out my supply and demand area. We can see price rotates quite nicely. And then eventually we want to see what? We want to see price rotate back into this level and then continue. Okay, so let's just let's just put a couple things here. You can see it's nice in the 61.71 area. EMA on the 15 is looking really good. And then the tool that's most important, okay? The tool that's going to be very, very important that you utilize, you will see that if I just exit out of here quick, you go to the top left, you're going to get these two little things, long position and short position, okay? You're going to see once you start them, they'll be on your little toolbar at this point. How to calculate your lot size before entering position. So I'm being patient. I'm not entered as of yet. We want to see price rotate into overnight low, tap EMA, and then start to rotate high again. So what I can already do is I can put my long position at the ideal area of where I want to enter. Again, so I usually like to put it at the 50% of that supply and demand zone. And then I'm going to put it at this level over here, just below that little low over there. Okay. So we want to see price rotate. This is a 1 to 5. So it's a really good risk to reward ratio, but let's even cut it down a little bit further. Let's just say it's a 1 to 3. Again, this is a V1 model. So you guys will understand that a little bit more in the future or going through this program. So I'm going to enter around about this level. I can see now the most important numbers you're going to want to take note of is one, the top over here, 25. We're not going to use as an input, but it's good to know. Risk to reward, you can see risk to reward ratio. Risk to reward ratio is obviously 1 to 3.57. So I'm risking 1% to make 3.5%, 3.5% on this trade idea. Now, how do I do that by calculating my lot size? What is the next little thing, right? We're going to take this little number over here. It says 7.0. Okay. We're going to take that. We are preparing for our trade. What we can even do, just in case our trade is a little bit more higher or lower, what we can do is we can extend our stops just a little bit more. You can see we are taking 0.5% off the trade. Ideally, if we entered and we're going to target a little bit higher, it's going to be 4%. But we're taking 0.5% off the trade just to make it a little bit more accurate in terms of our risk management. What you're going to do is you're going to take that now, 8.2. Right, so you're going to take it to this position size calculator. You're going to select the currency pair that you're trading. Obviously, we are trading Euro USD here. We're going to have Euro USD account balance. We're trading a funded account or a demo account or a live account. You can select ZAR or USD. Let's say we are trading in USD hypothetically, right? And the account size is $25,000. Risk to reward ratio, what is that? It must always be 1%, right? If you are risking 1.5%, then you add that there, right? But 1% stop loss in pips, that's where you're going to enter this little digit over here, 8.2. And obviously vice versa if it is a short position, right? Your short position is going to be at the top and your take profit's going to be at the bottom. So we're going to be, because we are buying, we are using the long position tool, and we're going to put 8.2 there. So let's put 8.2 over here, right? Trade lot size. You can see once we do that, we click calculate. You can see it's quite easy and simple, right? Money USD, $250, which is 1% of $225,000. The sizing that we're going to be using on Euro USD is 3.05 lots. So all we're going to do is when price comes to this area, we are going to enter 3.5 lots, right? And that means when price hits our stop loss, we are only risking 1% at $250. And what it also means when it hits takes profits, we're going to be making $750. Okay. So again, preparing, let's go, there we go. Let's say that's what I'm saying at this point. Remember, I extended it a little bit more just to make sure. So it tapped our EMA, it tapped overnight high, it tapped our supply zone. We are very happy with that. Look at that. With our extending our stops a little bit more because our entry was going to be a bit quicker than expected other than down here, right? Our stops are still below the supply and demand area, which is good. So we have still planned ahead in terms of what we're going to be targeting. So we entered there. Let's say our take profit. Let's get that fib retracement is out. And we're going to aim for the 27 mark, right? And that's going to make it, let's round it off at $1,000 profit if this trade hits. Okay, we can see boom, 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 eventually starts to run and hits TP. Now, if price did hit this, our stop loss is only $250. Okay, so just to run over it again, what you're going to be utilizing in this scenario is you're going to be using 8.2, right? How you get the certain pip count that you're going to utilize the digits for this section is you have to use this tool or the short tool. You're going to take this, you're going to measure out your risk reward. If it is a 1-to-1, it's not really worth it, don't you think? If it is a 1-to-2, it's worth it. If it's 1-to-3, it's worth it. But anything below a 1-to-2 is not really necessarily something that you want to gun for. Not to say that some trades we are hitting a 1-to-1 by cutting it a bit short, but ideally we always want to gun for 1-to-2 or 1-to-3. I find most of my profitable trades in a little 1-to-3 section. Okay, so one more section. One more time, you're going to take out your position size calculator. You are going to search any pair, even if you are trading gold. I know a lot of guys trade gold. XAUD, USD. Let's go through to gold here quickly. Show an example. Okay, gold at the moment. Let's say we entered a buy here, for example. Boom. Our stop loss is below that little level there, 575. So you can see it's a lot more. The value of it is a lot higher. So 575. And you want to make sure that you do put that 0.1 in there too. 0.1, calculate. You can see we're going to use a 0.43 lots on this idea, right, to risk a 1-to-3. Okay, hope you guys understand that. This is part 2. It's a very simple process. Please, please, please make sure you're utilizing this. It needs to be done every single trade that you're going to be doing it. Otherwise, you're going to be risking more than supposed to. Just an example, quick, if you are risking 1.5% on a trade, you literally just change that digit and you can see there it adds 175 onto that trade idea. And there we have 0.65 lots instead of risking 1%. And that means if it hits that, it's going to hit $175. Okay, that's part 2. Very simple process, very simple to understand. Please, guys, utilize this. We went in part 1 why we should be utilizing this. So make sure you're utilizing it. Okay, cool. Grab some water. Let's get into part 3.